Hi, and welcome to Prepare Trading. My name is Robinson, and today we will be looking at a few stocks that are more active in the market. So I'll start off with looking at. I always start off with looking at the three majors first: the S&P 500, the Nasdaq, and the Dow. And the main reason for that is because all of the stocks that you might trade are traded within these indexes. So if the Nasdaq is going down, then it's more likely that your tech stock is going to go down. If the Dow is going down, then Boeing, Lockheed Martin, a lot of the U.S. Steel, a lot of those stocks are probably going to be going down because they're traded on those indexes. So it's very important to understand how the indexes are moving first, and then go and look at your trade because your trade may be kind of somewhat tied up into what's happening in the overall market. So unless there's specific news on what you're trading, so if Netflix has great news because they're going to expand internationally, then it doesn't really matter as much what the Nasdaq is doing because it might run still a little bit further, but it may be pulled back if the Nasdaq is really going down that day. So it's something to keep in mind. So just real quick here, I like to look at my moving averages first and kind of see where the market is in between there. So down here, this big green line is a 200-day moving average, and the S&P 500 has come into this a few times and has traded up higher, and now it's kind of into this double top. You have one top here, and then another top here. And the same thing for the Nasdaq. You have your first top here, and then another top here, but this one made a new high, and we may pull back next week into this. The Dow, on the other hand, has been a lot more choppy, but it's still kind of into this double top right here at 25, 425. So having said that, we have a lot of double tops, and the market may pull back, but we're not sure. Now let's look at some stocks. Okay, so let's see here. Change this time frame really quick. Okay, so on here I have four time frames. On here is the monthly, weekly, daily, and the 4-hour chart. And I use the bigger time frames to kind of get a wider view of what the market might do next week. If you're a day trader, I personally am a day trader. I like to trade within a 5 minute, 1 minute. But I need to know what the overall picture is before I start trading, right? Do we have an upward bias, a downward bias, or is the market trading sideways and I should just avoid the symbol altogether? And the easiest way to tell that is if you're looking at the larger time frames. So with that said, I like to look at, like I said, the monthly, the weekly, the daily, and a 4-hour chart. Having said that, we'll look at Google now. So Google has kind of run up here, tried to make a high, pulled back into the moving averages, and then came back up again, new high at 1201.49. But this is a monthly chart, so it's pulled back a lot since then, right? And if you look at this, just as the time frames get smaller and smaller, you can see more and more of the red candles, right? And if you look at the 4-hour chart, you can see the complete pullback. So we've pulled back. We closed at 1169.29 on Friday, and now we're kind of into this double top. And like I said, there's a lot of other charts. The Nasdaq, the S&P 500, and the Dow, like we just looked at earlier, the major indexes have all kind of made double tops. So this week could possibly pull back. If I was trading this, I would have more of a downward bias. But knowing that this is Google, knowing that news can turn it around, I would have that downward bias, knowing that the news or something could possibly turn it around. Maybe force it down even stronger, or make it go all the way back up and print new highs. It just really depends. So we'll just move on to another symbol real quick, into Chipotle. This is another one I like to watch here. Chipotle had a lot of bad news for a long time, and they've come out of that. So if you look at this long move down here, and then you had this bull 180, the market turned around and came back up, and it's kind of into this double top area. But this is also, for pattern traders, a V bottom, right? And we all know that V bottoms are very, very strong because they want to come all the way out. And it's kind of into its first double top right here, which is not unfamiliar. A lot of things are right now. And we'll see where it goes from here. So like I said, I would probably have that downward bias on this as well, but with an eye on the news, knowing that that could turn it around. And the other reason would be is because if you look at this weekly chart, there's a lot of green candles. I mean, this is 1, 2, 3, 4 weeks. Chipotle has gone for 4 weeks for the last, 4 weeks. It's gone up from 426 here at 469. So the market's gone up drastically. Just some things to keep in mind as you're trading and looking at charts. You always want to know like what the major indexes have done, right? So we'll go back to it real quick. In your major indexes, you've kind of made double tops into a lot of things that you're trading. So the charts that we're looking at are going to reflect that, and they have. When we find something that doesn't reflect that, then we should pay attention to it a lot more because that thing is probably trading at an extreme, whether it's up or down. It's because it's traded on an index, but it's not trading the way the index is trading. Like so, if we look at on Amazon, I'm sorry, here, it's traded on the Nasdaq, and it's not trading the way the rest of the stocks on the Nasdaq are trading with the double tops. It's got brand new highs on the monthly chart with no pullback anywhere in sight. We got 3 good months of just going up in Amazon, right? So if you look at a weekly chart, it's the same thing. You look at the smaller time frames, you start to see somewhat of that pullback happening here, but we still have this support area here at 1734. So in Amazon, I wouldn't have an up or a downward bias. I would just watch. Trading is about being in neutral, right? You can't just have a bias and say this is going to go up or this is going to go down. That's not a way to trade. You should be in neutral, allow the market to trade and do what it's going to do first, and then you can come behind and trade. Easier said, it's trade what you see, not what you think. Very old Wall Street rule, and it will keep you safe throughout your trading experience. Okay, so we'll move on to symbol here. One of the big ones I like to trade, Booking Holdings, formerly known as PCLN, traded on the NASDAQ, and it's at a double top here on the monthly chart, kind of broke above it, and we're going to kind of come down a little bit here. On the smaller time frames, the weekly chart, it's completely gone sideways. And I'm showing this as a last example because PCLN or BKNG, as it's known now, I haven't traded this for a good 2 weeks. There's just really no trade in here. If you were going to trade this for a long term, where would you buy it? I mean, do you want to buy it in the middle here when it still has plenty of room to come down and you could buy it there? Or do you want to buy it, So there's really nowhere to buy Booking right now. It's more about watching. And this is a classic case of being in neutral, knowing when not to trade something, and just saying, hey, this is a very expensive stock. When it finally gets to this support level here at 20.57.44, then I'll trade it. But until then, I don't want to look at it too much. So hopefully some of the themes that I'm saying here kind of ring true and you can kind of see them for yourself as you trade, right? Because there's a lot of different charts and patterns and things that you might want to trade, but when you get more focused as a trader, you start to look at things that don't matter and things that do matter and remain in neutral long enough to be able to see the difference between the two. So I hope this market update was helpful. My name is Robinson. Thank you for listening.